we're trying to do to actually provide you a summary, a review of what happened so far and what is expected for the next week, and to see together actually the overall trends of the market, like a bit of a preparation ahead of the new week as we're moving into the new week. So this is quite crucial. You should always add in your routine, if you prefer, your trading routine, and like a end of week monitoring, and every Monday morning to have a quick scan on your MT4 to be aware of the overall trend in the markets, like a preparation before you decide to either enter the market or before you actually do your technical analysis or the more fundamental analysis, and etc. So I'm gonna do a quick review of what happened so far this week, and as always, we're gonna shift into the MT4 and see together the one by one the currency pairs or the assets in general that you would like me to analyze. Just let me just quickly check that there is no audio or visual issue. Okay, I can see that we are live on Facebook and YouTube at the same time. So the broadcast is working perfectly. So let me just quickly. Okay, as always, guys, remember, I'm here for you anyway, so you can ask anything you want. This is your session. These lives are provided from Forex for free for you in order to help you with your trading and to educate. Try to educate you, try to pass our knowledge to you in order to improve your trading. By understanding fundamentals and technicals, you will manage to like develop your trading skills day after day. So it's important to add to try to educate yourself and to try to keep yourself up to date in regards to the current affairs. So okay, I have checked. Okay, so we are live everywhere. Perfect. So okay, as you already know before, actually I'm going to share dollar index just for a start. Okay, to start with something until I got your questions and the assets that you want me to cover. So as you already know, the spotlight of the week was actually Thursday, in which we had ECB and Ms. Lagarde speaking, ECB rate decision and monetary policy statement, and also US inflation, which actually is the one that dominated the market. So it's the one that had the highest impact into the markets. So let me just share my MT4. Okay. Okay. This is dollar. This is dollar index. Okay. Okay, I can see that there are 42 people here. I remind you, we are here for you. Please type below in the comments below in YouTube or Facebook any assets that you want me to cover or any questions that you have. Well, you might not understand how, why dollar index drifted initially after the after the US inflation data. You might not understand why currently it's like it went back to the 1924. You can ask anything you want. I'm here to reply. I'm here to help you understand what's going on. Okay. So until I got your questions, I will do a quick briefing on what happened. Hello, Agustin. Hello, welcome. So what's going on so far today? Okay, guys. Initially, as you can see, we had after the data a quick jump up to 1924, right? And that continued actually for 2 hours in a row. And eventually, after the markets calm down a bit, we have seen the dollar actually finding some kind of a foot down to the 90 territory, or even below the 19 territory, with the lowest level uh, 2 hours after the data are 89.96, so just a breath away from the 90 round number, and a key psychological level actually. So this was as we actually stated in our recent analysis articles. If you're follow us on social media, or if you keep an eye on the articles that we keep providing. So what actually happened is that the market actually digested the uptick in US inflation, and they calmed down a bit, because at least for the summer, it is not expected the inflation to continue rising. This is how the market at least interpret yesterday's reading. They interpret it as it was just a once-off, and due to the summer, due to the reopening, due to the fact that traveling is back, hospitality is back, and a lot of, in general, the tourism sector is back. There won't be any further rise in the US inflation for the near future, for at least until the end of the summer. So what actually happened is that the inflation fears calmed down a bit. That's why we've seen dollar drifting lower, finding a support at 91.90. That was yesterday's performance. Okay, so we have seen it a bit softer. Something that also was a key factor on dollar drifting lower since yesterday and up to the Asia session. So you can see that in the extension lower lasted until like very, very early this morning during the Asia session. So another factor that actually tracked this softer dollar was the extended decline of the US Treasury yields. Treasury yields are currently at 3 months lows, if I'm not mistaken. That's a significant reduction. If I'm not mistaken, this is a reduction that we haven't seen from the percentage perspective, at least since 1980. I'm not really sure of the date, but yeah, it's a historical drop. So we have seen the magnitude of the dollar over here declines be a bit limited. So we found the floor on 89.90, sorry. And so far today, we have seen a rebound, and is currently actually moving, trying to break the so far weeks, yes, since last Friday, resistance area. So it's trying to extend higher. It has reversed nearly all the losses that we have seen since yesterday, and it's actually presenting quite strong bullish momentum in the very, very short time frame so far today. So there is not a clear catalyst of this rebound other than the end of the week. So, the end of the week, like we do at the end of each month, like we do at the end of each quarter, market participants are like, are keen to close up some positions, get prepared for a repositioning on Monday, cash out as well. So it's a bit of a profit taking. What we have currently, because we have an empty calendar, economic calendar so far today. So we had very, very early in the morning some releases from UK. We had actually UK GDP. But other than that, it was a pretty much empty day from economic data releases. We have Michigan later on, but nothing else than that. So how, why actually dollar um, rebounded, it should be, or at least what we can say so far, is that is due to the profit taking that has weighted on treasuries. So treasuries continue drifting lower so far today. This is what we this has a negative correlation with dollar index, and that's why dollar index has extended higher, gained yesterday's losses, and it's currently at 90.25 level. So a little profit taking at the end of the week that has weighted on the treasuries after what we have seen after the week's performance. So yeah, also something that I missed mentioning is that yesterday's data actually benefited significantly the stock market. So the stock market have actually managed to extend higher, and to get well supported because of the uptick in US inflation, as I already mentioned. So they have found some kind of a boost. The same stands for European stocks, by the way, because also they got a boost, especially the Eurozone bonds, from the ECB yesterday, even though ECB wasn't the main driver, or it wasn't a key driver for euro dollar, but it was more or less the dollar decline. So, but nonetheless, as I said, the ECB announcement yesterday, especially their confirmation that they keep monthly PPP purchases higher, is something that supported the European bonds, particularly BTP and gilt as well. So this wait and see stance, this extension of the purchases, along with the with the anticipation of a positive outlook for the travel and tourism sector, is something that has supported overall the equity markets in Europe and US as well. So dollar rebounded. So from technical perspective, you can see that. I can see a lot of questions. Okay, I will be with you in a second. Let me finish the dollar index technicals now, since we have covered fundamentals. So as we have seen, this is the 1 hour chart. I tend to use the 5 and 9 exponential moving average, guys. The red and the blue are my 15,200 exponential moving average as well, along with my Bollinger's and Parabolic SAR. So as you can see, in the European session, we had a bullish cross of the fast moving averages, So 5 crossed above 9. So this was the very, very first alert of this rebound, along with the fact that parabolic SAR came below the price. And these two, along with also the stochastic, actually started rising and started providing some bullish signals since Asia session, if I'm not mistaken. Let me double check. Since 9 o'clock this morning, so it's server time. So on the European Open. So on the European Open, my fast stochastic indicator, I'm calling it fast because I have 5333 as in my settings. I tend to use it on 1 hour chart and 30 minutes chart. That's why it's a fast one. I have detected significantly the settings. So the very, very first signal that we had in regards to a rebound, a potential rebound, was on stochastic. So it managed to extend above 20 and it kept pointing upwards. Afterwards, however, the confirmation of this rebound came with this like quite big, actually nearly full body candle at 11 server time, with this bullish cross of my 5 above 9 exponential moving average. And indeed, the asset is extended higher. Currently, as I told you, retest the highs of the week, with MACD turning positive, even though the signal line remains below zero. So the body of the candles, okay, in order to find out whether this rebound runs out of steam or not, is crucial to monitor the body of the candles. So if you have seen the so far, actually this candle closes in just 9 minutes, but so far is quite decisively and quite strong. So if the candle managed to close decisively, like sustaining these gains and well above the open price, this could suggest that bulls are in control of the market, of the dollar index, at least for the 1 hour chart, at least for the near term, for the short term, intraday. Um, so, sorry. So, yeah, positive outlook intraday for the dollar. While if we flip to the daily chart, we have seen a lot of consolidation, but the asset managed to sustain gains above the 20-day moving average for 4 days in a row. However, this like the outlook remains neutral because it hasn't really managed to exit the ranking market that we have seen for nearly a month, right? It has stuck actually between 89.50 up to 90.50 territory. So it has stuck in this area. So for the medium term, if we don't see a decisive rebound and actually a break above the 50 exponential moving average in the daily chart, then the overall neutral to negative outlook is unlikely to change. We need to see a break, a rebound, decisive rebound, an extension higher, which will turn this 90-50 territory into support rather than a resistance area. So I'm done with dollar index. Let's see your questions. Okay, that's a very nice question. Excellent. Okay, excellent. Actually, I have posted this morning an article from a colleague of mine in Thailand, Shayud, which actually was triggered by gold and the reaction in inflation, and try to give some analysis in regards to the gold. Okay, that's very, 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 very good question. So Fadik is asking, good morning. We see inflation well above 3%. So actually, yeah, it's back to 5%. That was the highest in nearly 13 years. That was the biggest jump in nearly 13 years. But as Fatik is saying, we have seen also treasuries drifting lower, but we haven't seen gold actually reacting. So let me show you gold as well, and that's indeed true. Theoretically, the first of all, gold is a dollar cross, right? So on the weakness of dollar, it should extend higher. Indeed, okay, we have seen this reaction. If we zoom in and go to the 1 hour chart, my dear Fadik, you can see that on dollar weakness. Okay, so let me just quickly put some lines on. This was at 3 o'clock, was on the release. This is 3 o'clock GMT. This is 3 o'clock server time. So indeed, on the dollar weakness, on the softer dollar, indeed gold found some support intraday, and it retested 1900 territory. Your question, however, is why it has stalled and why it doesn't really extend higher, since we continue to have treasuries drifting, which are actually negatively correlated with the gold. So don't forget, that we have next week the Fed. Okay, so despite these ups and downs, and in general, we have seen the overall picture, and every single dollar cross, and actually every single asset in the market, even stocks, overall sustaining a sideways move, okay, for the last month. This is because we haven't seen Fed still, okay, but also we are in the middle of G7, but nonetheless, the what is really pending, if I could say, is Fed meeting next week. So what could boost gold, if you prefer? It will be actually Fed next week, along with a couple of higher inflation reports, like a continuation of higher inflation reports, that rather than a stabilized, a more stable report. So continuation of higher inflation. I mean, to become hotter than what the markets are expecting, along with the lack of recovery of dollar, and with U.S. Treasury yields extending lower. This is something that could eventually take gold out of this ranking market that it has been stuck the last month, and could boost it higher. So it will be it we have actually next week, it's full of events, but what is the spotlight, and what is expected to affect significantly gold is Fed, and especially the conference, that will finally give us a hint whether the tapering talks will actually continue in autumn, or whether they are thinking to start tapering from now, within the summer, within the next month, and so on and so forth. So I believe that this sideways movement has to do with the anticipation and the uncertainty of what the Fed could actually do next week. So don't try to explain everything, as we keep saying. Just stick on what you see, and the reaction of gold is pretty much expected. If you have a flattened dollar, then gold should remain, is dollar related, is the dollar cross should remain sideways as well. So yeah, sideways flattening on dollar is something that limits the gains for gold, as well as we still have the uncertainty around central banks, more precisely. Also something else that I would like to show you. Okay, you're saying that it's been struggling and you don't understand why. Okay, everything is like struggling. You see, we have ranking markets, we have ranges all over the place. If you put the daily charts in USA 500, the Nasdaq, Dow Jones, gold, silver, euro, dollar, if you just stick to the daily charts, you'll see that there was a lot of uncertainty the last month, and that was pretty much due to the fear of inflation, due to the inflation concerns. Even though inflation concerns eased a bit on yesterday's reading, However, they will remain on the background because it was a single release. We need to monitor inflation. We keep monitoring inflation in a monthly basis to see whether this upwards trajectory will continue, because the biggest fear for 2021 and 2022 is actually an overheat of inflation, an overheat of the economy. Right, this is what everyone is actually fears, and this will actually help us or boost the central bankers to take an action. So gold indeed. Gold indeed stuck. Okay. But what you should keep in mind, dear Fatik, by the way, are you responding or something, or just no, you're not. Okay, I think you hear me. So let me get back to gold again. So nonetheless, you're saying that it hasn't broken the 1900s, indeed. But if you see, the overall picture remains positive, okay? So inflation will remain a key metrics for the economy, for the economies, for the markets, and for everyone. So as long as it has as gold as long as gold has difficulties to stay above the 1900s, so if it eventually breaks it, okay, uh, as long as it has difficulties to sustain a move above 1900s, sorry. So yeah, as I was saying, as long as it has difficulties to sustain a move above 1890, above an extension higher, there will be some investors that could actually. Okay, I will rephrase it because it will sound wrongly. Okay, so from theoretical side, okay, from theoretical perspective, next week, if the treasuries continue declining, okay, if the dollar remains weaker and extends lower eventually after Fed clears clears what actions will take in the summer. If we have this all out, and eventually if gold managed to break the 1900s but actually to sustain a move above it, okay, because 1900s it takes us back 6 months resistance, which hasn't been broken yet, significantly broken at least. So if the gold managed to break that level, okay, this could either find some selling, because it will be or to build up some short positions if we see, or if the market participants see that the gold finds difficulties on sustaining a move above 1900. So keep that in mind. Even though uh, gold sorry even though gold is in an upwards trajectory, okay, from technical perspective at least, you can see that is losing positive momentum. So actually in June, we have seen MACD turning lower. This suggests an increasing negative bias, okay. However, as long as the asset remains in this upward trajectory, okay, the outlook remains positive with the so far flattening behavior like a correction on this rally. But it will be key to see a move actually above 1950, if I'm not mistaken. This is the level 1960, okay, which will pretty much alert the possibility of a retest of 2020s, actually 1960 territory resistance area. So pretty much everything depends on FOMC. So that's why it's keep moving sideways. We need to wait and see. Okay, I don't have anything else to say to help you with gold. But yeah, we had a heightened uncertainty with G7, with inflation fears, with the COVID variants, with some ups and downs on jobs reports in US. So the situation so far has been a bit mixed, but in general, it was the risk, it was the concerns in regards to inflation that kept all the assets, not solely gold, all the markets sideways the last month. So don't try to explain everything. Just stick on what you see, and what you see is like sideways move with key resistance at 1960 and key support at 1860, which is the lower Bollinger Bar area. A break above 1960 could open the doors to 1940 up to 1960 territory, which leads us back to October, November, December highs, while a break of the lower Bollinger at 1960, which is also the floor the last month, could open the doors down to the lower to a lower territory of gold, down to 50-day moving average, or even 200. So that takes us down to 1840, or even 1840, sorry, and 1811 territory. That is the case for gold for the daily basis. So daily basis neutral with the support and resistance levels, the ones that I have just taught you. Intraday, in the meantime, on the dollar weakness, initially rebounded. It topped at 91.03, didn't manage to break it, and a sell-off has started the last 4 hours in a row, which actually brought gold down to 1888. So that's a profit taking on the end of the week. People are closing positions. People are cashing out. That's it. There is no other catalyst or something that I am aware of, other than that, dear. So this is the case from the time being. This looks to be closing position on the end of the week, with people getting prepared for the new week. If the asset managed to extend lower below 1886, which is last hour's low, then the next actually it could extend even lower, with next support areas at 1883, 1877, 78, or even yesterday's bottom. These are support areas if it managed to extend lower. For the time being, MACD is neutral, so it doesn't give us an indication. RSI is at 37, but it has flattened. Stochastic is already on oversold conditions, so we might see this decline running out of steam. That's why you need to keep an eye on whether it will manage to break last hour's low at 1886. So if I put the 30 minutes chart, you can monitor this better. You can see that RSI has flattened, but MACD turned negative and is extending lower. RSI is ready to cross again the 20 territory. So intraday or in the 30-minute chart, there is some negative bias still. Okay, that was for gold. We have covered gold. Let's move on. Euro dollar continued bearish. Let's see. Euro dollar. So euro dollar, okay, it had a big drop this today actually. It was very mixed yesterday for the whole week, but eventually today managed to. If I zoom out a bit, if I put the 4-hour chart instead, actually, you can see how big this decline is. So despite that, ECB yesterday kept the monetary policy unchanged and pledged a steady flow of stimulus over the summer. However, today the asset found some fresh selling, if I could say that, and it drifted lower. So the reason for that, give me, okay. So as I was saying, the reason of this euro selling, if you prefer, is mainly the European equity market. So we have seen. Let me just show you. Let me show you DAX. Let's start with DAX, even though. So yeah. So the reason of this selling, despite ECB's commitment of purchase program extension, is mainly, where is it? Let me get back. Is actually it seems to affected by equity market and by dollars yield advantage. So what we are currently seeing, euro dollar maybe, it's euro dollar drifting back to 121 lows. So broken weeks support at 121.42 extended lower. So the next support area for euro dollar is down to 121 territory. It has drifted down. Uh, um, so what this selling is all about, it looks to be a product of a broadly outpaid moderate decline in the euro concurred with the broad firming in the dollar, which has lifted out of lows. So what is about this, it looks to be that forex industry, that market participant looks to be trading off a rise in the dollar's yield advantage, okay, because 10-year treasury yield, okay, um, is fraction, despite the decline that we have seen so far, is fractionally above flat. Okay, while the euro yield, which is called bond, the 10-year bond yield, is down by over 2 basic points. So the US 10-year treasury yields advance over the bond. So in the yield sector, we could say that the US 10-year treasury yield, despite the decline, has managed to be stronger than the 10-year bond yield, which is the Eurozone bond. So Eurozone bond is down 2 basic points, which is much higher than that the decline on the 10-year treasury yields in the US. So based on that, we have seen dollar advancing over euro. Okay, and this is something that happened as like in the since the European Open. There wasn't any data from Europe. There wasn't any significant ECB comments other than Holtzman, if I'm not mistaken. So there is nothing really that, from fundamental perspective, drove the euro dollar other than profit taking, as I already stated, and the advance of 10-year US Treasury in contrast with the bond yield. So, yeah, so this is what appears. So it looks that the markets, as I already told you, appear reluctant to commit to selling dollar despite the sharp drop in longer dated treasury yields over the last day. Yeah, so the selling started since this morning, as I already told you. We have a bearish cross of the fast moving average over here, which keep extended. MACD Bollingers are keep extending lower. My fast moving average are keep pointing lower. MACD turn negative. RSI is at 20, but there is still further room to the downside. Stochastic has stuck in the oversold territory without giving any indication of a reversal yet. So there is a lot of bearish bias still for euro dollar. Um, uh, so yeah, a lot of selling. Next support at 121. ATR is actually stating another 11 points. Which might be already done. Let me check. So it opened at 31, currently it's at 22, so already covered 11 points according to ATR. Let's check the 4-hour chart. 4-hour chart suggests 24 points. So that was, let me say, 60, open at 65. So it has actually moved more than what the ATR suggests. It has drifted lower for the last 4 hours by 40 pips, 43 pips, breaking the 200 exponential moving average over here, and with all the eyes on 121 territory. Yeah, 121 is quite crucial on this selling, because if we see a closure today, it's Friday, it's the end of the week. If we see tonight a closure below 121, guys, then this could trigger the formation, or the start of a rounding top formation, which is a bearish pattern. So keep an eye on how the euro dollar will close the week. Yeah, that was on euro. Hopefully I covered euro for you, euro dollar. Let me know if I haven't here. What happened here? The last one that asking for euro dollar is Lee. So hopefully I replied to your Kutolo. I have covered sufficiently euro dollar, guys. Okay, so euro dollar in a sell-off, negative bias remains the case intraday. In the daily chart, we need to keep an eye how we'll close the week, because 121 support is a key support, and if that breaks, we might see the asset turning into a negative bias, in a negative outlook in the medium picture, because we have continuously see declining since the mid of May. Okay. So the momentum has significantly decreased. The positive momentum has significantly decreased the last month. So yeah, keep an eye on euro dollar. Let's move on. What is this? Yeah, we have covered that. Pound. Let's shift to pound. Yes, another key mover so far today. So it has actually managed to do this rounding top, but it still hasn't confirmed it. So What I mean, guys, for confirming a rounding top, if you are aware of candlestick patterns, we need to see the floor of this pattern to be actually broken, and confirm that the asset is keep moving below that floor. So there was a selling again on pound. Actually, was this is something that started since the started prior the data, but it extended even lower on the data. We had GDP today, so the pound edged lower and it's kept moving lower on the track for on the track of a record of a disappointing economic releases from UK earlier. So even though UK GDP actually came at record high, it was higher than a year earlier. It's at 27.6%. However, what spoiled or what disappointed the markets since this morning, it was the manufacturing data and construction data, which actually missed expectations. But other than the disappointment on manufacturing and construction data, the key driver of the whole day for euro, for pound, for yen, for Aussie, Kiwi, gold, and so on and so forth is pretty much the dollar. Okay, is the dollar, and is this where is it? And the rebound that we've seen, and I have already explained. So pound drifts lower, 140, 140 has been retested, tried to rebound, but it quickly turned lower. This might be like an attempt of a correction or something, but it's keep extending lower. Fast moving average are keep pointing lower, something that suggests that intraday there are a lot of bears in the market, there are a lot of selling pressure in the market. Parabolic SAR is far away of our candles and above the candles, something that suggests bearish, which is a bearish signal once again. So it will be something that could confirm whether this the pound could keep extending lower on the stronger dollar due to the some profit-taking conditions that we have currently see. It will be a break, the closure of a candle, of an hourly candle or 30 minutes candle below the 140, 140 level. This is something that it might attract more selling pressure for today. So keep an eye on 140, 140. If that breaks, next real support area for the asset is 141, 141.10 territory. We've seen yesterday's the asset consolidating on that level, struggling to break, to move, to extend and move below it. So it was a temporary support, and it's also the 23.6 Fibonacci level on the nearly 3 months rally. So if the asset breaks 140, 140, as I told you, 23.6, 141, 12, 10 is the immediate support, and the very next one will be the 141 level, round number for the pound, for sterling. Overall, however, the pound remains to be in a bullish outlook. As I explained in my article earlier, okay, because we had a pound article as well being posted. the economic picture of UK is it's really good. It's really good. So the so far data, even the GDP that we've seen today, they are actually strengthening the overall UK economy, along, of course, with the strong rebound that we have seen the last 3 months in the economic activity of UK, along with the vaccination program, which is more than 70%, if I'm not mistaken. And overall, the prognosis for the months ahead for UK economy is good. Uh, so yeah, overall, and if we ignore the Indian variant, overall UK economic outlook, UK economic picture with the latest data, the data that we keep having the last 2 to 3 months are setting the UK, are placing UK in a good position. So that's why pound sustains an overall bullish outlook. And if you check the daily picture, you can see that indeed it stalled the last month in this range due to the uncertainties that we explained. But we have seen a rally since the beginning of April. It has managed to sustain the gains of February, March, April, 1, 2, 3, 4, 5 months in a row. It has managed to sustain these gains, and it has managed to remain. If I zoom out a bit, if I put the weekly chart, actually, it will be more like. So you see that the trend actually started back to May 2020, so a year ago, supported by the Brexit and so on and so forth. But yeah, you can see that it remains to the upside in an upwards trajectory above into the upper Bollinger Bar area within a channel, an upwards channel. This is the weekly chart. So the medium term picture remains positive. But in order to suggest whether this rally will continue, we need to see a break above the 142.45, which is the peak that we have seen back in February and in May, while the immediate resistance area is at the around 142 level. It's a level that it has retested several times the last month. It's a round number. It's the edge of the upper Bollinger Bar area, and it's a key resistance level as well. So this is a key resistance area to be watched for those interested in the medium-term picture. Intraday is losing some ground, finding some foot right now, but we need to see a break below 144, 140, 140 in order to suggest that the selling will continue. Let me check the 30 minutes chart, stalled a bit. Bollingers have reverse, so we might see consolidation. He might see 140, 140 to be a floor level instead. Yeah, so in the meantime, a rebound from that level, back to above 4160, it could retest again yesterday's highs and the 141.80 territory. So that was for pound. Aussie New Zealand. Okay, Aussie New Zealand. Aussie New Zealand. I think I got it somewhere. If not, I will put that on. Don't worry. Okay, here it was. Yeah, I remember. So Aussie in New Zealand actually advanced significantly. Where was it? Yeah, advanced significantly on the since Asia session today. It was where is it? Where is it? So sorry. Okay. Yeah. Zoom out a bit. New Zealand. So individually, okay, let me just. If you check Aussie, New Zealand, Aussie And Kiwi, let me get back a bit to show you. Okay, the where initially, okay, I will. Okay, that was on dollar. Okay, initially on the open today, Aussie was one of the biggest gainer, but on the dollar strength and on the profit taking situation that we are currently see, it has drifted significantly. But let's get back to Aussie New Zealand, the one that you would ask, because it looks very very promising, very very interesting. In general, you should know that Australian bonds and New Zealand bonds has found some buyers overnight, so they had a really really good performance this week. But nonetheless, let's stick to what you're asking in the Aussie New Zealand. So Aussie New Zealand has been in a rally since the beginning of June. So it rejected this floor at 105.98, 106 if you prefer round number, and it has rebounded for the whole June. It's in a rally for the whole June as it keep extending higher. That's a very interesting cross, Dr. Michael. Thank you for bringing that up. It's something that it would be nice to keep an eye next week. Let me put it down actually. So it's been a rally. RSI cross and points upwards, cross 15, keep pointing upwards. MACD is a bit, it's neutral, hasn't confirmed that this there is a bullish bias, so would still need further confirmation. And still the asset is facing this key 2 months, 3 months resistance at 108 108 or even 108.20 territories. That's a crucial resistance area. Yeah, but what I can see right now from technical perspective is that the asset it has is in a rally. It has posted 1, 2, 3, 4, 5, 6, 7, 8, 9 continuous 9 bullish days in a row, leaving behind the 20-day moving average, the 50-day moving average, the 200 moving average, the 9-day moving average, and 5-day moving average, and it's keep extending. So the picture so far for Aussie New Zealand in a daily basis looks positive. But yeah, this is a key resistance area. It needs to break this level, not to suggest that it will keep advancing. So that's in the daily side. Now you have, I assume that you're asking in regards to the intraday picture. In the intraday picture, it's in an upwards trajectory and it keep pointing upwards with keep extending higher highs, higher lows. Fast moving average are keep pointing upwards. Parabolic SAR remains below and far away from the actual price, something that is bullish. MACD keeps rising. Can you see that is slowly rising? You see that? I think you can. Yes, you can. RSI, you can also see RSI over here that even though it had a small correction over here, is still trying to reverse back to the upside and to point upwards and to suggest that there is still bullish momentum. So what I see like that, what I currently see is that the intraday picture remains positive. Let me check the 30 minutes chart. It had a small correction, just a tiny correction, and it has rebounded the last 30 minutes, and the Bollingers are expanding higher. MACD positive, RSI, okay, flatten a bit, but remains close to 70 territory. Yeah, this reversal looks to be just corrections, nothing else, for the time being at least. And as long as it doesn't get back to below 107.87, or more precisely 107.80, 185 territory, which is like it's a 20 period moving average at the 38.2 Fibonacci level on the rally that we have seen since yesterday. So that was on Aussie New Zealand. We have covered gold, quiet weekend. It's weekend, yep. You should monitor the markets like on. Thank you. So you should return and monitor the markets like later on, like on Monday morning, to see, or even tonight on the closure would be good to write down anything that triggers your attention and anything that has my broken key support or resistance levels in order to prepare yourself for Monday morning. So, what is happening with Swiss yen? What direction is the market hitting? Hitting is it is going to be bullish or bearish? I assume you're asking just about Swiss yen. Swiss yen was actually the biggest gainer in the morning when I initially started. When I was like in the European Open, you see, we was had a rebound, but eventually drifted lower. So it's just it looks to be okay. Let me just other than a strong dollar, it looks we look to have. Let me just double check what's going on. So let me put dollar yen as well. Yeah, it looks to be yen weak, yen weakness as well. So yen struggling in the meantime. Okay, so let's get back to Swiss yen. As I said, there is no catalyst from data releases or news perspective. I will double check, or I will check my news feed right now just to confirm whether something else that I might am missing or something. But yeah, dollar is the strongest. Kiwi is the weakest. Swiss also is weak. Profit taking. This is what it is. It's end of the week, so don't try to explain everything, guys. Okay, it is what it is. Just follow the trend. Check your technicals. So what we are seeing, okay, we've seen rebound in the morning, unable to sustain gains, quickly turned lower, but it managed so far to sustain this 122 level. And actually will bring that lower on the 200 moving average and the round 122 territory. Just this looks to be a better support level. So it is what it is. It turned lower. It has formed this kind of a head and shoulder formation. It would be very interesting to see whether this head and shoulder formation will actually being confirmed on Monday. Because for the time being we have this kind of formation, but the neckline hasn't really broken yet. The neckline is somewhere here. Actually, more precisely, should be here. Yeah, which we have this low yesterday. So the neckline is down here. So keep an eye on those levels, on the 122 level, because a break of it could confirm a head and shoulder formation, which is a bearish pattern. Okay, so nevertheless, as it reversed lower, it found the floor so far at 122.06 level, but the fast MAs are pointing to the right hand side. The same stands for 50 period and 20 period moving averages. So this looks to, what this suggests is that this decline is running out of steam. Yeah, RSI also like turning higher. Stochastic also turns higher. MACD is very close to zero. So this decline looks to run out of steam, my dear Michael. So keep an eye on that. What could eventually suggest a reversal higher? It will be a move above 122.20 territory. Okay. However, a break of 120 of this immediate support could open the doors to 122 level, even though everything points to a sideways movement for the time being. Daily picture remains sideways, stuck, struggling to actually show a direction. Is sideways since 25th of May. What else? What are your thoughts for G? Oops, sorry. Oops, sorry. Are you? I'm not sure whether you're asking about GameStop or not. I'm not sure what you're. What do you mean about GME? Are you referring to the stock, to the GameStop? Because this GME, is the abbreviation on GameStop. To be honest, I have seen the news about. I have seen the rise of GameStop, but I haven't really uh, I haven't really followed the news. We don't really offer it. It's not something that triggers my attention, and I have completely ignored it. Sorry, cannot help with that. I think gold will go down when the COVID fear passes. Yeah, don't forget, however, how the correlation, the strong correlation that gold has with the central banks, with the policy and inflation. So, COVID fears have actually temporarily passed already because the vaccination is keep moving, and the economies have already reopened. So, don't forget that gold, first of all, is a hedge asset. It's an asset used for hedging inflation. Don't forget that it's a non-yielding asset as well. Don't forget that it's a dollar dominance asset. It's related with, is actually impacted by dollar dominance. So these are the key things, four key things that you should keep an eye in regards to gold direction, other than COVID fears. So it will be inflation, is a non-yielding asset, so whatever happens to yields affects immediately gold. Uh, um, Affected also by monetary policies and the actions of Fed, and yeah, pretty much this is it. So yeah, keep an eye on yields and inflation for gold rather than COVID fear. So I quite disagree with you, my dear Ninja. Hi. Yes, Alexandros from Cyprus. Thank you. We're like live from Cyprus right now. Why have this? I'm not sure what this question is all about, Michael. So come type again what you need. Yes, this is what is expected. Is expected to trigger a bit of attention, to touch a bit the. The it will actually, it's expected that he will clear a bit this mess in regards to whether they will or will not take any tapering actions. So um, actually Fed, that it is not expected next week. We don't really expect that Fed will impact prevailing policy expectations. So Fed is now widely expected to remain on an inflation accepting mode, okay, because this is on the back of price pressures, the reopening supply bottlenecks, shake it out, and etc. So we don't expect that they will change anything, but it is expected that on the statement, on the conference, the comments will, as always, hint on whether tapering is anytime soon or whether it's back to Jackson Hole, so the end of summer and probably within autumn season. Yeah, so we will have the conference is crucial. It will clear whether they go along with, they will follow the rest of the central banks, and will probably discuss about tapering talks in autumn rather than summer. What if so? What reaction would they expect for the dollar if he does this? Okay, uh, actually, if okay, depends how what kind of how it will be, what's his tone will be, whether it will be hawkish or dovish. But um, theoretically, if he pushed tapering for later, like after summer for the auto season, if he pushed tapering like over there on that period, dollar should find some support, theoretically speaking. But depends on what kind of tone he will follow. Like yesterday was dovish. So even though euro wasn't, this is another reason that euro found some selling. Okay, a dovish tone. Dollar cat. Okay, dollar cat. Okay, dollar cat rebounded, retested 121.20 level. However, it quickly turned lower and it get back to 121. Let me check a bit. Okay, this looks to be. Sorry, guys. So okay, of course, this is on dollar's strength. Okay, so I don't need to explain that. I taught you that in this the end of the week, the profit taking led so far in a stronger dollar, even though the overall outlook for dollar is negative, neutral to negative rather than positive. So all this mess that we keep seeing today is on. Due to profit taking on that weighted on the U.S. Treasury yields and supported dollar. So we have dollar CAD boosted higher, retested 121.18 territory. This is something that we keep seeing like for the whole week, but it didn't manage neither on Tuesday, Wednesday, or Thursday. It didn't manage to break this level. And if I shift to the 30 minutes chart, you can see, yeah, it retested but quickly turned lower again. So this move, this rebound runs out of steam apparently. MACD remains negative, RSI flattened and very close to 50. Stochastic already turned lower with a bearish cross of K and D percentage lines. So this looks to run out of steam. Apparently the commodity currencies, antipodians and Canadian dollar, on this profit taking today on the stronger dollar are like finding a lot of pressure. So commodity related assets suffer so far today. And we had we had also households from Canada earlier, which have grown 17% during the pandemic. So this should be positive for CAD, for Canadian dollar, but yeah, the dollar strength dominated the pair, and the good news from Canada didn't really help the loonie. So yeah, what was the question? I forgot the question. So what direction is the dollar CAD hitting, and why have it been stuck between the 120.50 and 121.10? Everything has stuck. Okay, everything has stuck. And that was due to the risk situation, the uncertainty, and everything that we have just discussed. But yeah, it is what it is. What you can do is just be patient, wait for a decisive move outside the ranking market in order to provide confirmation, in order to confirmation that finally we exited this range. um, uh, we have finally direction for the assets and more precisely dollar cut that we are speaking right now. Yeah, it has stuck, but that was the case all over the place due to the due to the to the inflation fears. Don't forget something that we had a lot of news over in June. We had a lot of hacking. We have seen huge payments for cyber attacks into the two companies already paid to hackers like massive a massive amount of Bitcoin in order to open, for the example, the Colonial pipeline, in order to open the meat production, etc. So we had lots to going on over the last month. Um, so yeah, this is something that you should keep an eye on. That's something that kept the markets in a fear, in anxious. So it is what it is there. So keep an eye. 140. Actually, dollar cat has entered a range market, and you can see that this is my continue because my Bollinger's over here are very close to each other, suggesting that there is still a lot of sideways move, but keep an eye on 121.40 and 120. Only breakout and a rejection of these levels could show us a final direction on the dollar cat and a confirmation that it has exited this range. Nonetheless, all Canadian dollar is affected by oil. So overall outlook are expected to be positive. So we're expecting dollar cut to keep extending lower on a stronger oil prices. Okay, but as long as we don't see a break of 120, then this is not the case. Yeah, but in general, um, other than oil prices, sorry, other than oil prices, so we're expecting oil recovery to keep extending, to keep moving. So this could benefit Canadian dollar. Also, Canadian data are relatively good, other than the labor market that is not giving signs of a significant growth yet. But yeah, as long as oil keeps moving higher, as long as we have seen an underpinned by a compo of ongoing sub capacity output from OPEC plus group, and as long we have the rising global demand because it's summer, we have airlines back, jet fuel will be needed, hospitality is back, so fuel will be needed. So all this look to suggest a promising bullish outlook for Canadian dollar. Okay, so be patient. Uh, yes, these lives are saved in our Facebook and YouTube page, so you can watch it again. Uh, what I'm seeing. Okay, let me get back to euro dollar. Maybe something changed from the moment that we have covered it. It surely did. So open. So free fall to 121. Thank you for letting us know, dear Lily. Indeed, it broke the level that we were discussing earlier. So more and more bears are entering apparently the euro dollar, and sell off continues. Parabolic SAR remains upwards. Fast MAs keep extending lower. Bollinger's keep extending lower. MACD extended lower. RSI is below 30. Stochastic is below 30. Is pointing slightly to the right hand side, but we cannot really tell yet. And selling pressure continues. Okay, human. Thank you. Uh, all in all, after market close, yes, always this should be your routine. It's good for you guys to watch Friday's closures. It will help you on Monday. It will help you to place or you to put to place your when you are pending orders. Okay, some pending orders to be ready for the new week. Um, what time? Actually, I like checking daily first, just to have an overall view of where the trend is or whether we have a trend or not. But yeah, I tend to analyze 1 hour chart. Yeah, I don't really like the fast environment. I don't like 30 minutes to 15 minutes, but that's my personality. So yeah, I like the higher time frames, daily, weekly. And if I found something interesting in an intraday basis, it would be 1 hour chart, but this is just me. Each one of you should have its own strategy, its own program, its own trading style. So yeah, this is just me. Yes, overall, a positive outlook. By saying overall, guys, I mean in the medium term picture, so daily, weekly. For the time being, is in a selling pressure in the 1 hour chart. So 1 hour chart, intraday outlook is negative. But yeah, keep an eye on 140, 140. I cannot tell you what to do. I cannot tell you, my dear wise ninja. Nice nickname, by the way. I cannot tell you what to do, but by giving you all these technicals, I'm trying to help you. So you will try to take your own decisions based on what we have covered today. We have covered gold. As we already said, is overall is moving sideways, stuck within 1860 and 1900s territory. Intraday is in a sell-off on the dollar strength, on the strong dollar. You can see fast moving average pointing lower. The nine, this is nine, right? Is it my 5 exponential moving average crossed the 250 exponential moving average in this 1 hour chart? Something that is bearish cross. Stochastic points further to the downside. RSI is ready to cross 13. It keeps pointing lower. So negative outlook for the 1 hour chart. It decisively crossed 2 of my resistance areas. And it keeps pointing downwards. So negative, a lot of selling pressure on gold for the day. Next support is at 1877 and 1875 level. Sorry, Wise Ninja, I cannot really tell you anything about GameStop. We don't offer it, unfortunately. So it is what it is. I haven't really checked the technicals, so I cannot really help you with the technicals of GameStop. I'm sorry. I have seen that it was in a rally this week. Dollar cut. We have covered dollar cut, so I think can the dollar cut get to 124 region next week? Who knows? Who knows? Remember, we cannot predict the future. We are like trying to limitate or to be on them to limitate the risk and to have the possibility next to us, to have the possibility on our side. The 124 that you have just mentioned means literally 3,300 pips higher. Okay, so in order to hit to get back to 124 level, it needs to to move to rebound decisively and break at least the 1 to 22 territory. So for the time being, no, I cannot really tell you, my dear. It is what it is. It's neutral so far. I cannot see any bullish signs so far, and definitely not the 200 pips move to the upside. So, yeah, stick to what you see. Keep the possibilities on your side. Don't try to predict. 124 looks to be just a prediction uh, of like a medium or something. What I see from the technical side or fundamental side doesn't that is not a rebound of dollar CAD. By stating that Canadian dollar is expected to remain in a bullish outlook, I mean literally the Canadian dollar. So a strong Canadian dollar leads to lower dollar CAD. Okay, so based on what we said, like higher oil prices, more global rising global demand of oil over the summer period, then this, based on this, we should see, or we might see dollar cut extending lower. So Canadian dollar to get stronger than US dollar. Okay, so a good payback, yeah, or a blowout of your account. Please, please don't get greedy. Try to stick on what you see. Okay. As I told you, a 124 level to be heated, we need to at least see the asset getting back to above 122 and actually sustaining a move above 22. For the time being, this is very far away, and take into consideration all this decline that we kept seeing since February. That's not the case, at least for today, for so far today. Okay, so guys, the most bearish now, yes, of course, the most bearish now is Kiwi. That's why I was thankful to Michael. I think it was Michael that brought that in. I was thankful to for Michael that brought that asked me to analyze Aussie New Zealand. So New Zealand dollar Kiwi is the weakest currency so far today, while dollar US dollar greenback otherwise is the strongest of all so far today. Okay, so I'm running out of steam, guys. I'm quite tired. So anything that you want, that is a final call for questions. So okay, question just came from Lawan on silver. So in contrast with gold, silver has found some floor. That's a bit weird. I'm not really sure why this is happening. Weirdly, but in contrast with the non-yielding gold and this precious metal, silver has found actually suffered some losses, just temporary ones, and has rebounded. So sustain a day's highs, rebounded away from 20-day moving average. Fast MAs remain to the upside, even though they point to the right hand side. So it's consolidation for the time being. I will shift to the Lawal. I will shift to the 30-minute chart to see what we're getting, whether this is consolidation or a rebound. So okay, we don't have a confirmation of a bullish bias in the 30-minute or 1 hour chart. It rebounded, but yeah, we don't have a bullish crossover here. Um, it's a, it remains neutral, I will say. Not confident too. I don't really see something. Of course, we had a rebound, so the fact that Bollingers are keep pointing upwards suggests that it might try to retest again today's highs. MACD is decisively positive, is well above zero. Stochastic just posted a bullish cross. Stochastic, let me show you stochastic as well. Let me put stochastic on again so you could see it. Can you see it has just posted a bullish cross? So in the 1 hour chart, the asset is being supported, is still supported by bulls. So key level to be watched will be, key resistance level to be watched will be the 128 30 territory, 128 more precisely 26. Yeah. Overall, what's going on overall is stalled. It's stalled in a sideways movement. So intra daily neutral, 1 hour positive. That was it, guys. I will call it a day. I'm tired. You keep asking questions, but we have covered these assets. Okay, so a kiwi. We discussed that kiwi is the weakest of all. So all the kiwi crosses should react the same. Should move along with on the mentality of a weaker kiwi. So you have asked about. Okay. Uh, Kiwi over here. This is New Zealand dollar against dollar. 171.43, the low of the day. Broken yesterday's support, actually Wednesday's support. Yes, and it keep extending lower. Fast moving averages keep pointing lower. Bollingers keep extending lower. MACD turn negative. RSI just crossed 13 is keep pointing lower. There is further area to be covered to the downside for RSI. So a lot of selling pressure. Next support level could be seen at 71.40. 71.30. Let me put a nice resistance. Okay, so okay, so 161 extension is down to 0.7136. Okay, so a lot of selling pressure. What else you wanted? Euro, kiwi pound, kiwi pound. Kiwi pound on the weakest kiwi. Yeah, of course. Pound kiwi should extend higher because we have a weak, overall a weak kiwi. So rise, broken week's resistance, and is getting back to last Friday's highs. So the next resistance areas to be seen will be on 197.80. There is a lot of bullish bias. MACD had a bullish cross, RSI ready to cross 70. Fast moving averages keep pointing upwards. So if 197 breaks, guys, the next resistance area to be seen will be actually cannot even find it, will be up here to let me put the 4 hour chart, maybe help me. So a break of 197.80 could open the doors higher to 198.20 level, and okay, yeah, 198.20. So keep an eye on one on a breakout of 197.80 because this will open the doors to 198.18, 198.20, which is another 40 pips higher. Oh, questions are keep coming. Guys, we have Michael. You've been here from the very beginning. We have covered pound. We have covered cable. Guys, I will call it a day. Then the cable is at the very beginning. You can watch what I have said earlier. Or unless if Michael, you're just inform us about cables performance. Let's see. Yeah, it rejected. So it just crossed 140. Okay. Yeah, but still, it's it wasn't decisive. Yeah, but still neutral. No. You need to be a bit more patient, my dear Michael. You need to see a rejection, a decisive move lower. Keep yourself on a 30 minutes chart. This will help you. If this candle close negative, then this could open the doors further to the downside. And very last one, pound is getting stronger. No, it's not. No, it's not. No, it's not. Literally, it's not. It's a very, very strong sell-off, and it doesn't give in signs of stronger pound yet, unless if you're watching 1 hour chart. No, it's still on a sell-off. Pound is still under a lot of pressure. There is no sign of recovery yet. If you're watching 1 hour chart, then yeah, but this is 1 hour chart. This is 1 hour chart. This is a fast environment. This is a different environment. You need to stick to a particular time frame and don't move. Don't just stick on one time frame. Okay. Europe, also the very last one that I'm gonna cover, and I will call it a date. Anyway, we have covered literally everything that you have asked, so you can the recording will be there, and you will be able to watch it again and again. So yeah, Euro pound reverse. This is a daily picture in a downwards pressure since last week. Found, however, some floor on the 50-day moving average in this 156.50, but yeah, it has turned lower. This is a key support. So let's see the 1 hour chart. So we have seen some kind of a lower lows, lower highs and lower lows. So it's in a downwards trajectory. It has rebounded the last 3 hours, but it failed to break the 20-day moving average. So sellers are actually in control still. It failed to break the 20 level. We have a very indecisive candle over here with the length of the tails be equal size. So that suggests that this rally it's limited. It was limited. MACD is negative, RSI is below 50, didn't manage to break above 50. So this rebound looks to be temporary or running out of steam. So yeah, the asset it remains to and downwards pressure. Thank you very much, guys. Hope you're having a great day ahead. I need to call it a day. I'm quite tired. We're already an hour and 37 minutes live. Hopefully today's session helped you. Keep an eye on today's closure. Keep the trend as your friend, and stick to one time frame, because what I understood over here is that you're struggling a bit with separating what we mean by bullish and bearish, and in the time in which time frame. So you need to stick on a time frame that you like, that is your style, and do all the technicals based on that particular time frame. Don't go up and down all the time and get confused. Stick to the time frame that you are mostly interested in, and try to technically analyze the asset on that particular time frame. So have a great day ahead. Have a great weekend ahead. Take care, and I'll see you again next week. Thank you. Bye bye.